Tether prints $2 billion in USDT, while the US dollar loses 10% of its value in just 8 months. So what happens with the narrative of stablecoins when it becomes obvious that they aren't so stable after all? Plus, Bitcoin priced in gold has been banging on the ceiling at record levels for over 4 years, coiling up and looking ready for a breakout that could change everything. And stick around till the end, because the old debate about whether Bitcoin is just a store of value or whether it needs to be a medium of exchange has finally been ended for good. Welcome to No Second Best, the show where conviction meets reality and reality points straight to Bitcoin. I'm your host Hurley. Now let's get into it. Bloomberg reported today that Michael Saylor's strategy has met every requirement and more for inclusion in the S&P 500, predicting $16 billion in inflows on day one if it is included. If this happens, it would mean that a company whose balance sheet is essentially Bitcoin and whose entire corporate strategy is to accumulate as much Bitcoin as possible would sit inside the largest and most important stock index in the world. Now, it's important to remember that inclusion isn't automatic. The S&P committee has discretion. They weigh sector balances and economic representation. But whether it's this week or this quarter, it does feel inevitable. And when it does happen, it will mark a milestone: Bitcoin entering the bloodstream of global passive capital. Announcement for this inclusion window will be tomorrow, September 5th. So we don't have to wait long to find out. At the same time, the Fed is staring down its first potential rate cut of the cycle. Markets are betting nearly 98% odds on a September cut to be announced at the FOMC meeting on September 16th and 17th. That matters because Bitcoin is still a market, and markets move with liquidity. And if the tide is about to turn, Bitcoin could be the first in line to benefit, as it has historically. New data from Glassnode shows Bitcoin's supply held by whales has hit a 7-year low. This data comes in as we continue to track whale selling behavior this cycle, especially over the psychological $100,000 level. Now, some would point to sustained whale selling and scream bearish. But let's think this through a little. Coins aren't vanishing, they're moving. From early whales into ETFs, corporate treasuries, pensions, and maybe even passive S&P 500 flows if strategy makes it in. That, mixed with Bitcoin's strong and resilient price action, does not spell weakness. To me, that spells redistribution from concentrated players into broader and more convicted hands. And meanwhile, Bitcoin priced in gold has been quietly consolidating at record levels for 4 years and has been banging on the ceiling since early 2024. If this market were exhausted and if the story were fading, Bitcoin would have already given that ground back, especially when you consider gold's historic run over the last 2 years. Instead, it's coiling like a spring. And when it does eventually break out, you better brace yourself. But strength like this doesn't just come from charts. It comes from conviction. It comes from people deciding that Bitcoin is their preferred store of value. Bitcoin OG Tur de Meester spoke with Preston Pysh recently about this foundational shift.
The real trunk of Bitcoin is that store of value property. Like, that is the real kind of the root, the strong foundation of it all. And then the branches and the leaves, like, that's more retail, that's more that high speed stuff. But I do think, especially now that we're seeing the middle class is kind of disappearing, something that used to be very easy, like, oh, I paid $20 for a wire transfer, wait for 4 days for the money to arrive. Maybe younger people especially are not going to be willing to endure that anymore, or just not be able to afford it anymore. So maybe those people will just kind of become Bitcoin natives increasingly. But that's then also a generational thing. So that takes some time as well. Like, boomers are not going to run their own nodes, but they still have the majority of the money in the economy for now. I keep saying it, but next year, boomers are going to be between age 62 and 80 years old. So it's really kind of getting to that point where they're going to be liquidating, they're going to be gifting, sometimes just to stay afloat, sometimes just to kind of do family planning. That's coming in the next 5 to 10 years, especially if the pain in real estate keeps increasing.
The root of Bitcoin and any good money is how well it stores value. Everything else, like payments and high-speed transactions, are the branches and the leaves. And as Tur lays out, this is also generational. Boomers still hold most of the wealth, but they won't forever. The younger generation will no longer accept slow, expensive banking rails. And that's part of the reason why they're Bitcoin early adopters. Now let's zoom out. Strategy S&P inclusion would open new gates of capital. Fed cuts would bring fresh liquidity. and the Bitcoin to gold breakout is waiting in the wings. Which brings us to the fiat Ponzi itself. Just this week, stablecoin giant Tether minted another $2 billion of USDT. For those unfamiliar, so-called stablecoins are digital tokens backed one-to-one with US treasuries. In other words, they're not an alternative to the dollar, they are the dollar, just digitized. And as Swan CEO Corey Clipson pointed out on X, USD fiat coins have lost 10.9% of their value in the past 8 months. Probably time to rename stablecoins to something accurate. It's becoming widely known that fiat doesn't store value at all, which is why the store of value versus medium of exchange debate in Bitcoin has always been based on a false premise. Jack Dorsey recently argued that Bitcoin becomes irrelevant if it's only a store of value.
I think if it doesn't transition to payments and find that everyday use case, it just gets increasingly irrelevant. And that's failure to me.
Well, Natalie Smolenski recently fired back brilliantly, saying that if something is a store of value, it already has value, and anything with value can always be exchanged. She calls Dorsey's argument illogical, and says it's like saying a store of value becomes irrelevant if it's only a store of value. Smolenski goes on to explain that value derives from two things: utility and scarcity. Utility in the case of Bitcoin is censorship-resistant, peer-to-peer transacting. And scarcity in the case of Bitcoin is its limited supply. She goes on to say, of course, Bitcoin is also a medium of exchange. Now here's where some economists get confused. A medium of exchange does not have to have a high transaction velocity in order to enjoy high adoption as a medium of exchange. In order to function as a medium of exchange, a commodity must be acquired and held by users with the expectation that they will be able to use it as a medium of exchange in the future. This is why savings, money sitting in the bank, are still money, even if transaction velocity with that currency goes down to zero for a time. So long as that money functions as a store of value, it will be able to be exchanged for future provision, which is the function of money. So you see, fiat money has distorted our understanding of money itself, and Bitcoin restores it. Scarcity plus utility, store of value and medium of exchange are interlinked. And if you think the fiat system can paper this over forever, let's go to Terdemeester again.
Maybe the Ponzi scheme is broke, but yeah, you got to find a way to keep it going somehow, or you have a literal civil war and the country falls apart, something like that. There's so many moving pieces, right? There's just so many moving. I'm also surprised to see how fast the international tensions are ramping up, and I think it is because, once the Ponzi scheme comes to an end, all of a sudden you realize how weak you are, and it means that, even in the past, outside forces that were considered to be weak, like these gangs or whatever, all of a sudden they can make their way in because they're profiting off of your instability. Like when Russia had their hyperinflation, it was so hard for Moscow to get even some revenue. Like Yeltsin organized a commission to figure out, like, why are the tax revenues not arriving in Moscow? What's going on? Like, we can't raise money. The money is the blood of the economy. Of course, you and I agree, there's anemia, there's all these problems. Once that really hits a certain critical point, the coordination becomes so hard in the economy. And now in the world economy, it's probably the first time that we're seeing a fiat crisis on a global scale. I don't know the details about China either, but they're probably going to run into issues with the yuan. Europe obviously is going to have issues with the euro. The yen is already toast pretty much. Now I'm seeing news that it looks like France is going to need an IMF bailout. The UK the same. Like, that's acceleration.
That's the real fragility. Once the fiat Ponzi starts to unravel, coordination breaks down fast. And when it happens across the entire global system, we find ourselves in uncharted territory. And that's where we're entering today. So what does this mean in the short to medium term for Bitcoin? Plenty of people are convinced it's simple. The 4-year halving cycle says it's time to sell. Sit on the sidelines and wait. But Bitcoin has a way of humbling those who treat it like a predictable chart pattern. Here's Tur one more time.
There's so many people running around saying, well, here we are. This is, we're coming up on the point in time of the 4-year cycle that you sell your coins and you go away for a year and a half and then you come back. And if there's one thing I've learned in Bitcoin, it's when you make a really simple decision like that, or you think you've figured it out, it seems to always figure out a way to prove you wrong and to change and to adjust. And Yeah, I have
Yeah.
no idea what to do right here.
I think that's why I put out the report, because I have that same feeling, and I was wrong back in the day in I think it was 2016, late 2016, early 2017 maybe, where we were like between $1,500 and $3,000, so it was a new all-time high.
Yeah.
And people had this like mental block. Me too. It was like, I think this is too much, and people who are ignorant are getting in. And I remember even selling some Bitcoin, just thinking like, oh, you never know. And then we went to 20,000.
Yeah.
And most predictions seem to be hovering around like 200,000, which is, yeah, it's a 2x from here. But I don't know. I don't know.
I mean,
I'm very happy to have egg on my face, when it happens and be exposed or whatever, that I was way too bullish. But I do feel like we could tack on another 18 months possibly to this cycle, maybe, 8 to 18 months or something like that, and have a real blow up. Because also the capital is now concentrated in Bitcoin. Like, yeah, there is an altcoin, we're seeing that bubble up again, these coins, in my opinion. But people are so ignorant. They were in previous cycles. They know Bitcoin is the game in town. And also, if you have appetite for risk, go at it, right? In the Bitcoin space, any kind of risk, it's there for you. You name it, you can buy it. So you don't have to go to these pump and dumps.
Fiat fails because it cannot store value. Bitcoin wins because it is value. From S&P inclusion to Fed cuts, from Bitcoin's strength against gold to the cracks in Fiat's stable facade, every signal is pointing in the same direction. We are living through the handoff from a failing Fiat system to a thriving Bitcoin standard. Now, this still will likely take decades to play out, but the direction is clear, which is why taking a long time horizon on Bitcoin beyond the next few years is so important. So if you want help navigating this transition, building a serious long-term Bitcoin position with the right strategy, support, and security, consider talking to a member of the Swan private team today. Our team works with high net worth families, individuals, and businesses to design long-term accumulation and custody plans. No noise, just Bitcoin. Reach out at swan.com/no-second-best to start your journey today. And if you want to meet with the thinkers, builders, and policymakers shaping this future, come join us at BTC in DC, September 30th to October 1st at the historic Kennedy Center in Washington. This is much more than just a conference. It's where Wall Street, Washington, and Bitcoin collide. Visit btcindc.com and use code SWAN for 10% off your tickets. But move fast because they won't last. And finally, a quick shout out to Mara, the world's largest publicly traded Bitcoin miner, for supporting this show and for helping make Bitcoin the world's most decentralized and secure monetary network. So what do you think? Will strategy make it into the S&P 500? Will Bitcoin finally break out against gold? And do you agree that the store of value versus medium of exchange debate is finally over? Drop your thoughts in the comments below, like this video, share it with a friend, and subscribe to the Swan Bitcoin channel for more signal every single day. Thanks for watching, and remember, there is no second best money.